Good morning, Oliver. Thank you very much for having GTC Group. I think the financial markets, the old saying is that you sell in May and you go away. But 2024, that's been nothing but anything but the case. On Friday, the Nasdaq closed at another record high. That's the fifth straight week of gains. We do see that at the beginning of this week, the US and the UK public holiday is going to lead to somewhat of a quieter tone when it comes to financial markets. We're actually looking for Asia to really lead the charge, at least for the beginning of this week, where we've got key economic data from India, which will be the GDP numbers later this week. Naturally, India has been the shining star of the world economy so far in 2024, with the projections that it's going to become one of the five largest economies over the next couple of years. And then at the end of the week, we've got some really key economic data from China. Why is this important, Oliver? It's because so far in 2024, we've finally seen that the Chinese economy seems to be turning the corner and starting to get back on the right track after what was years of protracted lockdown. So we do have an important economic calendar and a key week for financial markets overall.
And gold is suffering its worst week of the year so far. What lessons can we draw from that?
Lessons in terms of what goes up might come down, because we saw just 1 week ago exactly that gold prices hit a new record high just below 2,450 US dollars. But as we're having this interview now, we're actually just down sharply by $100 lower than that, which is just below 2,350 US dollars. Essentially, it's a sensitivity when it comes to the interest rate outlook, specifically whether the most developed central banks of them all, specifically the US Federal Reserve, are going to cut interest rates as aggressively and also as fast as what's been priced into financial markets, because we had some signals from the economic data last week that the US Federal Reserve might only cut interest rates once over 2024, which is a sharp contrast to the 4 or 5 ambitious interest rate cuts which was priced into the market. That's why we have some sensitivity, but we have really key economic data from the US this week, so I do expect to see some more volatility in gold as well.
And what can we expect traders to be looking at for this week?
We might be able to take a break from US economic headlines today, but that's not going to be the case for later this week, because we have the Q1 first quarter of 2024 US GDP reading. But more specifically, on Friday this week, we have the Federal Reserve, which is the US central bank's preferred gauge of inflation, which is the PCE. That comes out, and that's really going to hand it out on a plate whether the market's been too sensitive towards repricing in the US central bank interest rate cut narrative for 2024, or whether we really can expect the Fed to only cut interest rates once. So I do expect a busy week overall, and we might have a bit of a slow start, but that's not going to be the case as the pace picks up over the next couple of days.
Jameel Ahmad, Chief Analyst at GTC Group, thank you very much.